But I'm going to do this. I'm actually going to skip over some intro stuff and just kind of jump into some things and give you guys a little perspective. Obviously, we're here. We're talking about trading. There's risk involved. We need to understand that. But let me lay a foundation and let you know kind of like what I'm looking to accomplish here. This chunk of the expo here is designed for one thing, and that's to help determine whether you're looking to gain an advantage in your futures trading. I know a lot of you are Forex traders. I get that. We're talking primarily about futures, but the principles, the data, how we look at data really applies to all markets, although I'll stay in the futures realm just to kind of keep things clean because we have a short amount of time. I'm already 10 minutes short on my time. Just realize it's not for everybody. Successful people do what unsuccessful people cannot or are not willing to do. So I commend you on being here to find that out. I'm gonna skip over intro stuff. I do want you guys. I know Josh mentioned a little bit about Noft, but let me help you understand about that Noft team, because I think it's important to understand history, because when companies start up, it's like sometimes some company will start up because it's a random thought. Oh, I want to make money. I could sell a course, but there's reasons that the better companies, the ones that are longevity, there's a reason why they do what they do. There's a challenge, and many of you know this challenge when it comes to trading in any market, and that challenge is trying to get a grasp and understand what the institutions are doing. The institutions like the banks and the financial institutions and so forth. That's what we're going to talk about. Now, there were a handful of individuals that came out of that professional trading world, and as they transition out, they realized that they had a huge advantage over the retail traders and things like understanding the market, technology, emotional, how much money they had to spend in the market. And these are like, you and I are retail traders. These are the things that we're up against when we actually go to place our trades. Like we constantly have to, and I get comments like this all the time. Well, every time I make a move, there's an institution that controls the market and they're taking us out. True. There's a lot of truth to that. So leveraging today's ability to collect data, because the world has changed, 3, 4, 5, 6, 8 years ago, whatever, you could do a lot of lagging indicators and it worked very well, but the amount of data that's available, they developed an idea, the Noft team, which is to create a state-of-the-art analytical ability to look at the market with the same data and track and stock or hunt and stock the institutions and trade it like the institutions do it. Now, they found a good number of traders that have an understanding of market structure, and I know Josh was talking about that, and that is good. That does not, everything I'm about to talk about here does not take away any of that. We're talking about leveraging data, information to make decisions faster and be able to get in sooner or out sooner at the wrong times and the right times, and I'll go over that. There was this thing called order flow sequence tracking that's missing, and that's what I'm going to go over today. I'm going to skip over a couple pieces again because we're short on time. But there's companies out there. You may have traded with them. You may have used them that use order flow and market footprints. And oftentimes for me, when I looked into it, it's very, very confusing. And that's where Project Noft was launched. And it was kind of to solve that dilemma right there. How do you start thinking? How do you hunt and stock the institutions? Take the institutional mindset. This is the mission. Combine it with the order flow sequence tracking, create the tools, what they did, and provide retail traders the ability to look at that information that the same way the institutions do, and then be able to, again, hunt and stock. And it's a term we'll use a lot. Hunting and stocking, watching what they do, not letting them be able to take you out of trades and be able to watch when there's trapped traders and there's momentum and all these things that are going on. And that, at the forefront of this is teaching this, and you guys might know this gentleman right here, a gentleman by the name of Troy Epperson. And again, I know you've read up on him, and I'm not going to do a long time, but when you start working with Noft team and you potentially look into the IES program and the data that's available and what they do, you're going to continue to go out through your journey and learning this. You'll be with him on a regular basis. You'll be learning from him. You'll be live with him on a regular basis, just like Josh. These guys have a ton of credibility. They've taught me what I know. I worked with Josh a little bit back in the day. Great guy. I mean, it's incredible to have. If you're going, here's the thing, and I'll shift gears. If you're going to take on anything and look at maybe trading or business, make sure you have somebody that's there that can actually help you and can guide you, not just saying, hey, here's a cute system, plug and play, call me when you're rich. And this industry is littered with a lot of that. And I think it's unfortunate because it's left people high and dry. And the best educators, the best tools typically try to say, hey, we're going to do it with you. We're not going to stand behind a black box and hope that this something works for you. Is that fair enough? All right, so with that, I wasn't in early when Josh was doing some of his initial stuff. I want to ask a question real quick just to get a feel for where everybody's at. First of all, let me know, what is your primary type of trading that you do? Like futures, options, stocks, Forex, type that in. Like, and if you do other things, if you're like primarily futures, but you dabble in Forex, maybe let me know. I just want to get a feel. Okay, so far about a 50-50 with the Forex and futures. It's good to know. And for you Forex traders in here, because my background, I learned Forex first from some amazing people, incredible organizations out there. But okay, stocks, Forex beginner. Okay, do me a favor also, for those of you typing in, on a scale of 1 to 10, what you just mentioned, stocks, options, whatever, where would you rate your trading experience? I want to kind of get a feel for that, because I don't know if I need to do a quick little heads up. Here's a little bit about how futures works. Okay, some crypto people. Thanks, Derek. I appreciate that. Liza, I got you. Rachel, it's good. Kevin, Forex, ES oil. Okay, we'll talk about the ES today. See, Renee, I've got you as well. Telus futures. Okay, let me. I don't know if I have enough time. Usually, what I like to do is spend a couple minutes just giving people a quick rundown of especially for Forex traders. I remember when I was kind of shifting and looking into other types of trading, there were some things that were very confusing for me, but I'll just say this. Once you understand you're buying low and selling high, you're going short, you're going long, you're trying to find good places to get in, and some of them you can, some trading areas you can leverage more, Forex and futures, high leverage, stock is low leverage. Once you get that though, I believe, again, that trading is trading is trading. You're looking to find the right place to get in, find the right place to get out. And that's all we're going to talk about today, okay? Bradley says he's a newbie. Okay, so for those of you that are new, I wanna let you know, here's my promise, okay? By the time I'm done here, you're gonna have a pretty good understanding of the futures market. You're not gonna be an expert. There's no way in 45 minutes I could teach you everything. I'm going to dabble in some things. I'm going to talk about how the markets work a little bit. I'm not going to spend too much time on that. But more importantly, you're going to gain an advantage. You're going to learn how you can gain an advantage over all the retail traders, by learning how to trade with the institutions and not against them. And again, if you're a futures veteran, give me like, I'm going to do a 3 to 5 minute crash course here. I don't want to spend a lot of time. I don't have a lot of time, but this is for the Forex folks, people that maybe trade other things. Let me just take a minute or two to go through, like, what are you doing when you're trading futures? Because this was confusing for me when I started shifting over. Futures trading is simply buying and selling standardized contracts, which are used for delivering goods at a specific future date and a future price. And you can see them. It allows for a lot of diversity. Metals, indices, currencies, you name it, softs, cotton, sugar, cocoa, commodities. Here's what I mean by contract, because this was a confusing thing to me when I first looked into this. Because when you trade like a Forex, it's the pound versus the US dollar. It's tangible. Contracts are a little intangible. Let me give you an example. Let's just say you bought a new house. And when you buy that new house, you need to get internet service for that new house. And you just happen to have one of those people that's going around in your neighborhood, and they knock on your door, and through a conversation you find out that they're selling internet service, and they have a deal going on where you can sign a contract for 1 year, and if you sign the contract for 1 year, you will effectively get your internet service for $50 a month. Let's just say that's the deal. That's pretty cheap internet service, but nonetheless. So you say, yeah, great. All right, so you sign the contract. You now basically, you own the contract, and it's a contract worth $600. $50 a month times 12 months, $600. So you bought it, essentially. Well, let's just say that the value of the price of internet service goes up in the next month, and everybody around you is now paying $100. That's like the going price. Well, you have this contract that says yours is going to be $50 a month. Imagine if you could take that contract, and you can't, like legally, but imagine if you could take that contract, sell it to your neighbor for, say, $80, $90. He gets a deal, you make a profit. That's essentially, again, very, very high level. For those of your futures traders, you know that was a little bit of a stretch, but it's a very high level. That's how I began to understand it. So it's the contract, not the product itself, that can be bought and sold in the futures market. There's always another investor on the other side And as the supply and demand of the goods rise and fall, the types of ones you see on the screen here, as they rise and fall, you're making money based off your knowledge of that daily market price movement. It's really all it boils down to. And then a lot of reasons why people might look into it. Again, this is one of those things I'll just kind of skip over, but similar to Forex, it's very highly leveraged, meaning that you can make a lot more money with less money, but also when that happens, there's potentially a little bit more risk involved. We'll talk about that as well throughout here. Very liquid, a lot more efficient and fair. I noticed that there's less spikes like there are in Forex, just so it creates, it's more regulated, creates more stability, okay? So let's shift gears. That's a real quick, so just remember futures, you're trading contracts, and then what we'll do is we'll talk about some of the lingo when we're actually getting into a trade. And we'll show you what a trade would look like and how we would set one up to be able to find it using like holistic information and data. Many of you, first of all, do me a favor, type in a yes if you could see. I've got my chart up on the screen right now. I'm just using NinjaTrader. This is nothing special. We're going to start overlaying stuff on this. Okay, thank you, Jose, Tina, Diane, appreciate that. Joe's got it, Bruce has got it, Vincent. All right, we're up and running, good. Okay, Olu, I've got you as well. So a lot of times people go, well, how could I potentially, if this movement that was going to happen right here, is there any way outside of maybe a candlestick formation or maybe some kind of a Fibonacci or something, is there a way to get in at the right time on this so I could take this for a run? These are called candlesticks. I think probably 99% of you know what a candlestick is, so I'm not going to spend a lot of time going over candlesticks. What I'm looking at here, just like earlier when Josh was talking about Forex, I'm talking about futures, but you can see the charts essentially look the same. So again, that's what I meant when I say that trading is trading is trading. You decide kind of where you want to play based off of volatility, how much it takes to get into a trade, how much you can make off it, what you know about a certain type of market. Some of the things that are maybe new to you if you're not a futures trader is up here at the very top left-hand side. It says ES0319. That's a cryptic language for those that don't trade futures. ES is a symbol, and it represents the S&P E-mini, S&P 500 E-mini. I only have like 6 different, these are called, they call them instruments or they call them contracts, however you want to say it. If you ever want to look up and see what's available, what could I trade, just go to go do a Google search. I mean, this one's on barchart.com. I don't have any affiliation with these guys. Barchart.com, you can come down here and go, well, I want to trade indices. I want to trade financials. You click on financials, you go, well, I want to trade the 10-year treasury note. And you can see there's the symbol right there, the size of it, how much money you make per contract. We'll talk about that and the movements that we talk about in futures are ticks, T-I-C-K-S. It's a fraction of if you hear like the stock market went up by a certain amount of points, a tick is the smallest amount that it can move within that point. And so what you'll see in futures, it's a little bit different because not everything's the same. Some people have larger accounts and want to play at a higher level and want to make a lot more money faster. And so you might trade maybe the S&P 500. And I'll show you what that looks like here. That would be meaning you'd have to, if you're going to make a trade for one contract, you'd have a margin or put in, if you will, $6,600. And when the market goes up, you're going to make $12.50 per tick. I'll show you what that means here in that movement we just talked about. Yeah, maybe you don't want to play at that level, or you're just getting new at futures and you want to kind of see if this is going to be the place where you play and you only have a couple $100 to invest. You might maybe trade something like the euro dollar. It moves slower. It's not as profitable, so it's not going to be as much to enter in. And this is a big difference. This is kind of the equivalent of maybe, if you did a Forex, if you're talking about mini lots and standard lots and things like that. But each one is different. What I found is that most futures traders usually focus on 1, 2, maybe 3 different contracts, and they just stay in there. Do me a favor, those of you that are futures traders, is that a true statement for you? What are the ones that you guys typically, I'll read some of these off. What are the contracts that you guys usually find yourselves staying in? I'm sure I'm going to see a lot of ESs, maybe crude oil, NASDAQ. These are some of the more common ones. Okay, yep, exactly. Yeah, two or three of them, most people just stay in that realm. Yeah, NQ, NASDAQ, says Jose, Diana got you as well. Good. So again, once you get that piece and you realize and you go, all right, well, if I'm looking to trade the E-mini S&P 500 and it's a contract out there and I bring my chart back up and let's just say, okay, so Renee says the ES, the crude oil, and the NASDAQ. Okay, so let's just say we got in down here. Just as a hypothetical, here's a number, here's why you might go, okay, futures might be the thing. Maybe you got in and maybe you got in a little bit late and your entry point, your buy point, if you will, you went long at 24.83. Let's just write that down. Your entry point was 24.83. I'll just use whole numbers. And you caught this movement, and nice little movement, and these are candlesticks, 30 minutes, 30 minutes, 30 minutes, so 1 hour, 2 hours, 3 hours, 4 hours later, so this was yesterday morning, 4 hours later, you're at 25.34. Okay, what does that mean? If we could capture that, what does that mean for a profit? So this is 4 hours. Wait, let me do it again. 2, 4, 6, 8. Yeah, 4. Let's call it 5 hours of movement. What does that mean from a profit standpoint? Now, you're not going to be going back in and calculating all this stuff. What you basically want to do is find a futures calculator out there somewhere and just come in here and go, well, I want to trade crude oil. Okay, you can type in crude. You can type in whatever. Again, this is just a website that's out there. I'm going to talk about the ES. All right, gives you all the data here of how much per contract and when they expire. And you got in, let's say 24.83, and you exited that trade. Or let's just say you were looking to make the trade and that was going to be your target. And you might also want to know what risk you're taking. But let's just say that's your target, right? 25.34, is that what I said? Yep, 24.38. And you put $6,600 down. You had that in your margin and you did one contract. You could do 2 contracts. You could do 3 contracts, whatever. Calculate. Okay, would you please do me a favor and give me a yes? Now, this is a pretty big move, but do you guys see that in that 5 hour period of time, that's a $2,550 net profit? It moved 51 points and 204 ticks. Is that visible? Do you guys understand that? I'm telling you, like, you know, a 2 to 3 hour movement on the ES making $500 or $700 is not unrealistic. And what we're going to do is talk about, well, how do we identify that? There's a lot of things you can do to identify that. What the challenge is, most people, when they trade with what's called lagging price indicators. Lagging price indicators. I mean, lagging price indicators are things like, well, actually, you guys tell me. I'm going to transition. What are some of the current, whether you trade Forex, futures, stocks, ETFs, you name it, options, what methodologies do you guys and ladies currently use? Just type it in, like Fibonacci, support and resistance, trend lines, market structure, I could, moving averages, you name it, Bollinger Bands. What are some of the things that you guys and ladies are currently using? I just want to get a feel for that. And I don't want to take that away. If you're doing well with that, keep doing it. This is not a strategy. What I'm about to talk about is not a strategy to say, hey, that doesn't work, do this. That's a pitch. That's what people are constantly doing. Oh, yeah, that doesn't work. How about you go do this? No, we're saying that's going to work, but we can do better. And if you don't have something that works, we can actually do better. All are lagging. That's exactly right. EMA, RSI, Keltner channel, MACD, support resistance. So what we're talking about, 95% of all the answers that I have here are called what's called lagging price indicators. And the time, the day and age where those are effective or were effective, it's kind of slowly creeping away because of the advent of technology and the availability of data. Data has changed the trading game. And if you don't have the data, if you don't have the information, you're guessing, and you're doing what 95% of all retail traders do, just guessing. So we're gonna look at the market a little bit differently, and we're gonna use predictive indicators, if you will. We're going to use holistic data, seeing what's happening now versus what's happened 30 minutes ago or a day ago or 4 hours ago, whatever that is. And that's typically, okay, that's typically what most people do. So let's kind of talk about and look at the market a little bit different. I'm going to bring a chart open, and I'm going to look at the same ES chart, but I'm going to look at it differently. I'm going to use what's called a market footprint. Now, if you've never seen something like this before, do not get overwhelmed. You're not going to have to memorize numbers, and you don't need to be Neo from the Matrix to be able to see through this and make heads or tails of it. That's what our overlay, that's what the IES system does, and we're going to talk about that. But I'm going to explain some foundational things so you understand what you're looking at and why it's so important. These on the screen are what's called, they're called market footprints. And the numbers inside, do you see that those are actually candlesticks? There's some green ones, there's some red ones right there. It's like Christmas over here, right? Green ones, red ones, green ones. Now what I've done is I've made the time frame smaller. The reason why I made the time frame smaller because I don't want to have huge numbers in there, just for example's sake. What I'm going to do is I'm going to talk about scalping this, but you can day trade it, you can swing trade it. Okay, so it depends. Whatever your trading style is, I only have time to go over one, but I think this one's a little bit more clear, a little bit smaller time frame. So I got a 7-minute time frame on there. So these red candlesticks, they're still candlesticks, and inside them, these numbers actually represent the number of orders that were or are placed at that time and at that price point. So within this 7-minute period of time, there were hundreds of orders in that small period of time that were placed at that time and that price point. And some people would talk about this, and if they look at a market footprint, let me zoom in here a little bit more. They'll say that on the left-hand side is your bid price. So these are all the orders that were placed at the bid price, and on the right-hand side is the ask price. Those of you that are Forex traders, that doesn't really resonate with you as much. But here's what I'm going to say. I'm going to look at it a little differently. We're going to say that the left column represents, you might want to write this down, aggressive buyers. I'm sorry, aggressive sellers. I got it backwards. On the left side represents aggressive sellers. I'll explain what that means. And on the right side represents number of orders that are placed by aggressive buyers. So what we're going to do, this is called order flow. It comes from the Super Dom, if you've ever seen that, the time and sales, and it's all the literally the hundreds and hundreds, not thousands of little orders that are placed in any given time, any given second, and they put it into a chart to show you what those numbers look like. Well, how do we make decisions from that information? Because this is what's actually going on. Well, actually right now that market's closed, but this is actually what's going on right now. You're not looking at lagging indicator. You're not waiting for, a candlestick that was 30 minutes to close out before, and then another one to get a confirmation before you get in. We're going to look to find things that are happening right now and learn to get 6 to 10 ticks, or if you're trading Forex, because this does work on Forex, 6 to 10 pips ahead of all other retail traders. How do we do that? It boils down to a principle called aggressiveness. And I like explaining things simplistically. I think in this industry, a lot of times people tend to just try to sound smarter than they really are. I don't. I try to tell you guys that I had this same challenge of understanding some things, so I had to simplify things in my mind so that they make sense. Let's talk about the idea behind aggressive and passive traders, because aggressive traders drive the market. If the institutions control 95% of the market, and all the trades, so all those numbers we just saw, the institutions are controlling 95% of them. Wouldn't I want to know if those institutions are making moves? Wouldn't I want to be familiar on how to identify when they're actually gaining momentum, when they're losing momentum, when they're getting more aggressive, when they're losing aggressiveness? So I'll give an example. Let's just say you go to sell your house and you call it your ask price, you list it out there for $400,000. You get Bubba, the buyer, that comes along, and he says, you know what, I like your house, but I feel that there's some work that needs to be done, and yada, 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 and he offers up, and in trading world it's called bids, he offers up $300,000 and says, okay, I'll buy it for $300,000. Now, you're there. If you're the seller and you're not super concerned with trying to get rid of your house, there's no rush, there's no urgency for you, you're waiting for the market to come to you. You're what's called a passive seller. In the trading industry, passive sellers this is what a passive seller is. It's those of you, and I, same thing. So how many of you, type it in me, if you've ever set up maybe an area of resistance or a line of resistance or maybe a Fibonacci level or something, and you said, okay, if the market comes to this level right here, then and only then will I look to short the market. How many of you, type it in me if you've done something like that? You're waiting for the market to come to you. Amen, right? So aggressive buyer, a passive seller is somebody who's waiting for the market to come up to them before they sell, because they're not interested in taking that lower price. Now, if that buyer doesn't come up, he or she is what's called a passive buyer. So what do you think happens? And so a lot of times people don't really know, well, the market's going sideways, I don't really know why. Well, if you have a whole bunch of passive buyers and a whole bunch of passive sellers, what do you think is going to happen in the market? What is the terminology you guys call it when you have a whole bunch of passive buyers and a whole bunch of passive sellers? You know the answer. Yep, James got it. Sideways movement. Consolidation says Trish. Susan says ranging. Sarah. Okay, yeah. So sideways movement, ranging, consolidation, whatever. There's a lot of different ways to say it. So that's what happens. The market doesn't move a whole lot. Now, something along the line, something is going to happen to trigger that movement. And most of the time, the institutions are the ones that are actually driving it. And we all know this, and none of us like this as traders, but if we could be able to see how that's being driven, we can be able to make moves and be able to trade alongside with those institutions. So let's just take a different example. Let's talk about aggressive. Right, you list your house for $400,000, okay? Well, $400,000, you get a buyer that comes along, and maybe that buyer, he or she knows, he heard through the grapevine, maybe he has a friend who's in construction that said, hey, they're getting ready to break ground on a huge development out in that area. Hey, buy up as many houses in that area as you can because the value of it's going to go up. That buyer knows that information. You and I don't. And that's really where the institutions come in. The institutions know information that you and I don't. They have access to so much more information. So if that buyer makes a move and comes up to a higher price, we call it an aggressive buyer. They're willing to pay more, and they take that deal. They're what's called an aggressive buyer. Aggressive buyers and aggressive sellers drive the market. So we're going to be looking for those to identify themselves. And then same vice versa. Let's just say you're selling your house, and somebody comes along and they bid $300,000 from it, again, that low bid. Maybe because you just had your HOA meeting, you know that they're getting ready to build a jail across the street from your development. And you know because of that, the value of your house is going to go way down. You want to get rid of it as soon as possible. You take that deal, you're an aggressive seller. Okay, this is the most important principle of what we're about to go into, because the rest, once you understand this, looking at the numbers, identifying the indicators, it's a step-by-step process. Can you guys and ladies please do me a favor and give me a confirmation of maybe a yes or thumbs up? Does this concept make sense? Aggressiveness drives the market, and we're looking to identify the aggressive buyers and aggressive sellers. And if we can make moves sooner. Good. Okay, Julio's got it, Alice got it. Let me grab a quick drink of water. All right, we're a little short on time. Dwight's got it. Good, thank you. Appreciate that, Trish, and Jamie, Timothy, Andrew, Shirley, Clayton. Fantastic. Okay, let's go over into the market and talk about a step-by-step process in order to identify trades a little bit simpler. I want to say again, this does not mean you have to abandon any trading methodologies you use. I will say this, that you can use this in conjunction with your trading methodologies. Let's just say you're setting up maybe an entry point at a Fibonacci level, for example. And you say, well, I want to use this to confirm that and get in at the right time versus waiting, or maybe it allows me to get in a little bit more confidently is really what we're looking at. We don't need a whole bunch of stuff. We just need some very basic information. Now, I believe also that within 3 to 6 months of you using this type of way to look at the market, you will probably never go back to those lagging indicators because you realize that they're not as effective as maybe they once were. I'm not making a super bold statement here or saying anything you don't know, but we all know it's not quite as effective as it used to be. Okay, so when I'm looking to place a trade with this, there's about a 5-step process to make a decision based off these numbers. And I got to list it out here. You can write these down as we go. And I found one a little bit earlier. Obviously, it's Saturday. We're not currently in the live market. I can only do so much. But I'll show you what we would avoid and what we would look for and why we would look for things and why we'd avoid some things. And I'll talk about that movement and how we could have identified it. First thing I want to know is before I make any move whatsoever, I need to know is the current price of that contract. Now, this is where we start talking about currency. Is the current price of the currency pair, the stock, the ETF, is it overvalued or undervalued? Is it expensive or is it cheap? Now, there's a lot of ways to go about doing this, but with the order flows, with the data that's coming in, so what this is doing is compiling all the data, footprints, and then the system, we're going to overlay it and it's going to use that. It's going to use the supply and demand, and it's actually going to create a plot on the screen to let you know whether it's oversold or undersold, whether we want to start buying or selling. So I'm going to put it right here. I would say so, Ty, yeah. So this is called volume at price, okay? Value at price, sorry, the value at price. And I turn it on, and this is what the IES system provides for you guys. So I'm just gonna kind of let it roll here and turn it on, squeeze it down, because I want you guys to see all the pink and all the blue. All right, there it is. So over here on the right-hand side is a plot. And what the plot says is that if you're up here in the top area and it's blue right there, if the price of your currency or the price of your stock or the price of your futures, like up here, if it's in that blue area right there, you're in the buy zone. I'm sorry, got it backwards. It's definitely not the buy zone. You're in the sell zone, meaning that the only trades you would look to make would be sell trades. So literally, you can stay out. Oh, I'll get to that in a second, actually. If the market is down here in this blue level down below, you're actually in the buy zone. Buy zone is at the bottom, obviously, blue zone is top. If the market is in that orange area, some people call it salmon, some people call it pink, I'll just call it orange for now. If you're in the orange area, you will not make a move, you will stay out. Here's why I tell you that, because I don't know about you, but if any of you are actually traders in here, you can probably give me a big amen, hallelujah, that I would rather be out of a trade wishing that I were in than in a trade wishing that I were out. If there's anybody who's an actual trader there, can give me a amen, preacher brother, hallelujah, or something like that, you know exactly what I'm talking about. How many times have we been in a trade going, oh man, why did I do that? I would rather be out saying, I totally knew that trade was going to go that way. Because then we can have bragging rights. Oh, I called that. So, yeah, so that orange area kind of keeps you, and it doesn't matter if maybe you said, well, I don't want to trade the ES, I want to trade the NASDAQ. Okay, cool. Open up a new workspace, bring up the NASDAQ. Now this has all my indicators on it already, but I want to show you NASDAQ has the same thing. Here's the blue area up top, and way down here is the blue area on the bottom. So every different instrument has this, and they can all be leveraged. Okay, now. Second thing, so once we determine that, so obviously right here, we're in the no trade zone. But if we were up here very top over, 1 o'clock in the afternoon yesterday, you could see that we were in the sell zone, okay? So let's kind of explore that and say, okay, well, if we were in the sell zone up there, would there have been a trade opportunity there? Or better yet, if we're in the buy zone down here, would there have been a trade opportunity down there? Let's explore that a little bit. So the second thing we want to know, thank you, Dan, I appreciate that, Kevin. Tucker is actually my dog's name, so that's an awesome name. So second thing I want to know, is the market near any what's called institutional trade levels? Institutional trade levels are typically they're derived from your lagging price indicators, from like your Fibonacci levels, your support and resistance. There's also levels that Troy, and he's the one that's kind of leading all this up, he went in because he traded as a professional trader for so many years. He actually has identified areas where institutions typically make movements because they're just hot areas. So we have actually identified those on the chart. I'll bring it back up. So we want to know, are we near any of those? These actually are shown up, if I were to bring up on like a 4-hour chart, 4-hour chart here, spread it out a little bit. These blue lines, some of them are Fibonacci levels, some of them are support and resistance levels. So they're just all identified in there. Well, why would we put them all in there? So you can see everything that's available. What we're going to do, yeah, so who holds the contract for that long? What we're going to do is we're going to transpose these, they're called TLs right here, showed trade levels. We're going to transpose them onto this chart. So we want them to, the ones that were on the other chart, the candlestick chart, we want them to now show up here. So the point behind this step is that we are not going to place a trade, or better yet, we are going to hesitate. Now, as you get better at this and you start practicing this and you feel way confident and you want to skip this step, great. I would not recommend it until you are getting really good results, like 80% results, because the steps are there for a reason. We want to be within about 5 to 7 ticks of one of those institutional trade levels. So for example, let me bring this guy down here. Oops, I'm going to bring it up back to live market and squeeze this guy down. You don't need to actually see the numbers. Would you guys type in a yes if you would agree that up here, when the market was in this blue area, we were not near, we were a little distance from one of those institutional trade levels? Do you guys agree with that by saying yes? So therefore, even though everything looked great, great little high, we came back and it reversed, oh my gosh, like it waved, and this is pretty normal. You'll see this sort of thing. So we do not want to place that trade. However, and I know it's getting, the numbers are getting really small, but if I were to go way back down here, all right, and zoom in here, this is about, it's hard to see it, and I'll try to zoom in as best as I can. 1 second here. Spread this guy out. I want you to be able to see that in numbers. You are actually, how many you can see that we're actually near one of those institutional trade levels right there, right? So we're in the blue area down here, and we're near one of those institutional trade levels. Now, again, we're going to be doing this live. So when we do this with you, and we're training you, and we're trading with you, this is live stuff. Right here, I'm within about 5 ticks of that institutional trade level. So in this area right here, which, by the way, was the bottom of right here, at 8:30 in the morning, in that area right there, we have now checked the box. We're in the blue area, we're in the buy zone, and we're right next to an institutional trade level. So check the box, we keep moving on. It's just simply a step-by-step process. By the way, Richard says, how do I get this? Richard, if you, and this goes for anybody, if you have questions about this program or you want to talk to somebody, maybe get some additional information, I'm going to have to cut the program short in about 15 minutes. You want to talk about how to get this on your desktop, type in a phone number into the question box. That's not committing you to anything. What it's doing is getting you some questions get answered. I'll talk real quick about the price of the program and everything like that, but I want to make sure you guys are aware of that in the event that some distraction pops up or something like that, Richard. So just type a phone number. I'll have someone reach out to you as soon as we're done here, and we'll just have a one-on-one conversation to see if it even makes sense, because this is not for everybody. This is for certain types of people that want to really get an edge, okay? Poppy, I have your phone number as well. James, I have your number as well. So Jose says, doesn't the blue area have a chance to turn to orange when it's live? What it does, Jose, is it looks back. You can change how far it looks back. Right now, it's looking back 1 day, and it's getting that supply and demand data from the previous day. But you can do that the previous hour. You can do that the previous 4 hours. You can change that, Jose, okay? Third, I want to know, is the commitment of traders in the correct zone? What's a commitment of traders? Commitment of traders is simply this. When you're looking at a chart here and you have all these numbers going on, I'll try to zoom in here so you can see the actual numbers. I got all these numbers going on. The commitment of traders is the area in which the most amount of orders are actually placed in this candlestick. So I'm looking at this candlestick right here. If I were to say, I look at this, I'm like, I don't know where the most orders are placed. I can probably guess right around here. You're welcome, Jose. I can probably guess, but I don't want to have to stare at this, so I could turn on the indicator, say commitment of traders, which means the most number of orders placed, show COT, and I should get a little, oh, look at that, I even missed it. See, the eyeballs missed it. It was not this one, it was this one, and it was also this one, and this is the most number of orders. The reason why this indicator is important is because if you think about a candlestick, the most number of orders that are placed within that candlestick, we are going to, if the market's going down and we're looking to reverse and make a long trade, we want that commitment of traders to be in the lower half of the candlestick. But what that does is it tells us that the most amount of trades were closer to where the candlestick actually closed, which means there was more activity there. Does that make sense? A little bit of an abstract principle. Are you guys tracking with me? So we want to make sure, if we're going to trade this, we want to make sure that that commitment of traders is in the lower half of the candlestick, which it is in this particular example. Good. And it is also right here in this particular example. Great. So we have like double confirmation there, which is good. Now, if it's not, or if it's on the other side and you're looking to go down, we want it to be in the upper half. And again, we'll go over this step by step with you. I'm just kind of walking through the checklist, and that's why I did this in a short period of time. Then the fourth one is the aggressive piece. This is what we talked about earlier, and this is why we talked about the aggressiveness and the passiveness being so important. So we want to now know. So we've identified price, we've identified overpriced and underpriced, we identified where the most traders are, we identified, oops, I didn't mean to do that. We identified where the actual program is. All right, now we want to look for what's called a sequential decline. This is the aggression piece. This is the most important piece. This is going to be your entry point. So if I want to find an entry point, I want to wait for the candlestick to close out. I don't have to wait for the next candlestick for confirmation. I want to wait for the candlestick to close out. and I'm going to look for a place where there's a sequential decline. Let me explain what that is. A sequential decline is called dynamic reversal alert, is when you have, let me give this a second to populate and turn on. Usually these are all on already. Now it's just populating. It takes a second. Once you populate, it does it all. Okay. Please type in a yes if you could see that on both of these candlesticks, as the market came, there was 1,587 aggressive sellers. Then there was a little bit less, and then a little bit less, and then a little bit less, and a little bit less. Each of these times, it actually declined. The aggressive sellers, as the market was kind of adjusting, the aggressive sellers was declining sequentially. Do you see that? This is like, you know, we talked about that one movement, that $2,500 movement. This is like picture perfect. Does it happen like this every single day? No. That's, you know, nobody can stand here and call out trades and things and say, oh man, it always happens like this. That's a lie. Okay. But when you see something like that, whether you're day trading or you're swing trading or you're scalping, you see something like that, you're going like, oh my gosh, it's there. And you just, what it did is just, it connected everything. So you're in the bottom, you're in the blue area. You got a commitment of traders in the lower half. You're near an institutional trade level. Plus you have this reversal right here. That's your reversal indicator. So what you would do is you would actually get in at the close of the candlestick and you'd set a stop loss. That's what this next thing is. You set a stop loss. Make sure you have consider risk reward. Set a stop loss just a few ticks below the reversal. Here's why. Telu, Peter, here's why. Okay. In using this methodology, if you are wrong, you are going to know very, very quickly. Okay? You're not going to be sitting in trades for days while it goes up and down and up and down. If you're wrong, if the indicators point wrong, you will know very quickly. I would rather get out quickly, take a small loss, and be able to get back into my trade. Would you guys agree with that statement? Yeah. So again, we're talking about making real decisions off of holistic data, not based off of an arrow going up or a cute little system or something like that. We're saying, okay, we've got data that's showing us patterns that are going on right now. And if we could follow those patterns and create a pattern for ourselves, we could do the same things over and over and over again and start to get predictable results. So we enter into this, we set our stop loss, and here's where we set our limits. We're going to lock in profit at each of these levels. Lock in profit, lock in profit, lock in profit at each of those trade levels. And if you locked in profit or if you waited to lock in profit, you could see that entire movement went all the way up. Again, this is just yesterday. I mean, it just happened to be an amazing movement. Most likely, you're not going to be able to have $2,500 movements in one day, but you can kind of see how it all kind of comes together. And it just makes sense. You know, it's not about trying to just guess on things and then, well, and then of course you want to manage a trade by watching imbalance alerts. And there's another indicator on here. I don't have time to go over every indicator, but if you want to make a note of this, there are indicators for trapped traders. So you actually find out where people can't get out of their trades. That's a warning to not get in. Momentum alerts, exhaustion alerts. Matter of fact, I can even kind of show you over here on the right side of the screen where they are. If you go over into the order flow sequence tracking, you have the unfinished auctions, trap trades, buy blocks of trades, imbalance alerts, everything is in here. And the more indicators you have on, the more precision your decisions have. And you start to get confident. And you do the same things over and over again, and you realize that, like, I am making decisions not based off of a system, but based off of, and not based off of somebody else's information, but based off of my own interpretation of the data. So it's data-centric. There's also coaching involved. And as you can guys see how simple it is? Once you have the order flow sequencing, and as you start to go through the program and you evaluate whether this is going to be working for you, regardless of whether you're going to triple your profits in a week, that's not the point. The question that you have to ask yourself is, are people doing well? Are they reasonable? I know we'll get the success stories where somebody makes $10,000 in a day, but I'm talking about real people. You know, guys like Michael says, they're not indicators, they're market transparency tools, so they fit everybody's trading style. In fact, you should slap on, right? You should slap on the Pringle slogan, because once you OFST, you can't stop. Previously owning the IES, my risk for the standard 15 to 20 ticks, but now has been easily reduced to 5 to 7 ticks, and the ebbs and flows of the market make absolute sense. The ebbs and flows make absolute sense. So I have a question. I'm gonna kind of shift gears. I know I got a couple more minutes left. With everything I just showed you, if you had all the tools I just demonstrated at your disposal, and I could teach you, or better yet, Troy and his team could teach you a skill set, where you could take a couple $1,000 investment per trade, let's just say, and make several $1,000s month after month consistently, would you allow the Noft team to, and hear me loud and clear, train you, coach you, mentor you, guide you, give you all the tools, all the software, let you work live with us, let you trade live with us, and even provide you a guarantee on top of that? I'll reword that. If there were a guarantee associated with this, would you be willing to give the Noft team 10% of your trust and let them earn over the next few weeks the other 90? Yes or no? If there were a guarantee associated with it. Absolutely. And that's like when I look into things, I go, there's got to be a guarantee. If there's no guarantee, I'm not really that interested. I want to know that if I invest into something or I look into something or I try something, if it doesn't work the way that I want to work, I want to be able to, get my money back or give me some kind of a guarantee. Catherine, I got you. Charlotte, Jose says, of course, Oscar. So, and at the core of the program, it's not just, hey, here's a software, here's a tool. There's a comprehensive training program to teach you the fundamentals of what you need to know on how to trade with the institutions. So it's not just throw a piece of software over the bridge, over the wall, and say, hey, call us when you're rich. Hours of engaging step-by-step institutional trading methods. And once you're a student, once you're a client, you have access to all of that for the remainder of your life. It's there. It's on demand. Whenever they upgrade and update a site, they'll do that. They update a website. Somebody else is on the mic. If you guys can mute it, please. Thank you very much. Every single week, there's live trading webinars. So you'll be working with Troy every week doing live trading webinars. So it's not just, again, here's some videos. It's live every week. There's also weekly tech classes, people there to support you along the way. Got questions about the software. They do that twice a week. They will provide you the software. Yes, Fernanda says, does this work on Forex? Yes, I'll say it again. This does work on Forex. I just focused on futures today, okay? The software you have access to for the rest of your life. There are no, listen to me loud and clear, there's no upgrade fees. There's no monthly subscriptions on the software. Once you have the software and the tool, you have it for the rest of your life. They're not going to use it for 6 months and then it stops working and you have to pay $500 to upgrade it. How many of you have done that before? It's rampant in our industry, okay? They give it to you for the rest of your life. They provide you a blueprint so you know exactly what you're doing for the first 40 days. They also provide daily brief emails to walk you through step by step what's going on that day. Usually like 3 to 5 minute videos about trade levels and institution trade levels. And then the first 6 months, they're actually going to give you access. This is something they just did, and it's only for this webinar. 6 months of the advanced mentorship group. What's the advanced mentorship group? It's working with Troy and his team 5 days a week. Not 1 day a week. You have access to that for the rest of your life. But 5 days a week. Any questions, live trading, technical analysis, using the tool, using the software, using the order flow, you're actually working with them. That's extra. That's about a $1,200 program right there that they're giving away today for free. And I know at this point in time, a lot of you have already decided this program is exactly what you need. Yes, AO says, does this work with stocks? Yes, stocks, Forex, ETFs, futures, I think I got them all. Here's the great thing about the program. Noft is so confident that you're going to be able to understand, implement, and profit from the methodology. They're going to let you have the entire program for the next 2 weeks risk-free. That way, you don't have to sit here in a webinar, take my word for it. You decide whether it's the right program for you, because honestly, at the end of the day, the only person you really trust is yourself. All we ask is just give us an honest effort. And that's really what it boils down to. If you don't like the program, get your money back. No risk at that. So here's our Webinar Expo special. I started about 10 minutes after everybody else, but I got a few minutes to go through this. The program, it's about an $8,500 program. If you were to go online, I think you guys saw this earlier. I actually brought it up accidentally. You can literally go in here and you can order the program any day of the week. $6,700 right there. Click on it. You can put a card information in there and everything. That's great. You can do that. But this Webinar Expo, what I'm going to do is anybody who's enrolled in the Expo right now, if you type your phone number into the question box and you say IES with it, I'll give you the program 100% risk-free for only $14.97. That's less than $1,500. That's 1 day only for the Webinar Expo. It's very, very easy to get started. All you have to do is type your phone number into the question box. When you do that, what I'll do is I'll have an educational specialist reach out to you, spend as much time as necessary, make sure all your questions are answered. If I miss something, if I rush through something, and then you have a 100% money back guarantee. And folks, you're off to the races. The only problem you'll have is that you didn't see this webinar 6 months ago and get started back then because you've already been ahead of the game, okay? So I'm going to put a message out there into the chat box to let you guys know if you have any questions whatsoever, type a phone number in, okay? Jeffrey, I've got yours. I've got Arthur. I have Terrence. I have Dale. If you prefer to use this data and the approach for Forex, please let me know. The Forex program is also available. I'm just not talking about that as much today, but you can talk to somebody about that as well. So Jessica, I've got you. Charlie, I've got you. And then also, again, as a bonus, the first 6 months of the AMG program is a $1,200 extra. I believe that just the AMG program is worthwhile of the $1,500 investment, and plus you have the money back guarantee. So take the first 3 days. If you think these guys aren't doing what they're supposed to be doing in the first 3 days, get your money back, go do something else. Dave, I've got you as well. Joan, I've got you. Donna, I've got you. And again, simply just get some questions answered. I don't have a whole ton of time to go over all the details and talk about who's this right for, who's it not right for. I think it's probably just best if we have a conversation on the phone. But for those of you still thinking about typing in a phone number, let me just ask this question. Does the idea make sense? Does the idea make sense? Right. Yeah, because the beautiful thing, and there are payment plans available. If you'd like to do a payment plan, just type your phone number in. We can do a payment plan. You won't be able to receive the maximum discount. It'll be the normal webinar special, not the webinar expo special, but type in payment plan. We could do it working on a payment plan. If I'm wrong, Jose, anyway, Helen, if I'm wrong, it's 100% money back guarantee. You're smart people. You're going to figure that out in about 2 to 3 days. If I just say I had to make it all, I made up half what I just told you. It's just a hype game here. If I'm wrong, get your money back, go do something else. If I'm right, Gary, imagine the possibilities. So we're going to hold your hand every step of the way, ensuring you maximize your potential. There's so much upside and very little downside for getting this a 2-week test drive. I said it before. If you can't learn how to do this and get ahead, even though you might be doing good already, the data and the game is changing. You need to be aware of that, okay? So I'm wound down. Reed, I'm going to leave this up on the screen. For those of you that want to get ahead of the game, there is a phone number you can call, next 30 minutes only. I've got everything up on the screen here. I enjoyed chatting with you guys. I know I had to rush through a couple things at this point. Again, if there's any questions, if say, hey, Kelly spoke a little bit too fast, I missed this part, can you explain this? I have interest, but I'm not sure about X, Y, and Z. Type in a phone number, type your question alongside your phone number, reach out to you, have a discussion, and make sure this makes sense to you, okay? Take care, guys. Have a great afternoon, great morning, great evening. I'm officially signing off.